This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. I want to talk a little bit about what I consider to be the best trade, okay? And it's actually not a specific pattern, but what it is if you come in each day and you come in with the mentality that you have to trade, then I think you're putting yourself in a rough position, because what ends up happening is you force things to take place. You feel like you have to do something. You're on edge. And again, you let the hype get to you a little bit. If the market's having a big day up or a big day down, you feel like you have to participate in that direction instead of just following your plan. And so what I'm getting at here is, if you're going to play the trade, the best trade is one that you're coming in and you don't expect to trade. In fact, you come in for the day and you're saying, I'm really not planning on trading today. But what ends up happening is the market sets up, or a stock sets up in such a way that you've been following the stock or following the market, and it sets up in such a way that says, you know what, I have to take this trade. This is a perfect trade. That's the trade. If you did that when you came in every day and you said, look, I'm not going to put on a trade unless it is absolutely perfect, I think you're going to see your win rate go up. I think you're going to see the size of your wins go up. I think you're going to start realizing that your emotions are kind of coming out of the trading, because you're not feeling forced to do anything. There's no FOMO involved. It's really more about following your analysis and looking at what you're trying to accomplish. And if you see something that fits your plan and you just say, God, I really didn't expect to put a trade on today, but it's just too perfect. I've got to do it. Then I think you're on the right track. So I want you to think in those terms. Let me just show you, I want to show you what happened with the spider. Now on Friday, when I put out my videos on Friday, I do market analysis, and I'm trying to show you how to use 4 time frames together. And every now and again, I'll go down to a smaller time frame, but I typically, just so you're aware, I typically don't point out short-term trades that are coming, like minor trading plays that I would consider to be more like day trades or less, in advance. I like to show them after the fact, but the reason why I don't want to do that is because I don't want to take away from what I'm trying to accomplish on those videos. What I'm trying to do is show you how the approach that I use, my methodology based on my book and all the videos that I talk about using the moving averages, the MACD and the ADX, to analyze and frame out what is taking place. And so this week, or this past Friday, I was basically leaning on this 18, and you can see how the 18 day has continued to be a problem. If you draw a trend line, it is the 18. It's literally the same. You can't even see the 18 because the trend line is exact and the same. So when I see that, I know that's an important line. And until we get through that line, I still think that's important. But what came about from this is, the fact is that we rallied up to the 18 again, and market started turning down. And notice what happened on the hourly. The hourly had its opposing trend here with no strength here, and then we got the sell-off. Now, on this rally, now what I said in the video on Friday was we have a test of this low, we have a lot of bearishness, and I said that this negative reading could be a climax reading. And I should have said it could be either one. But what hit me when I saw this and the way this was rallying and approaching the 18-hour chart and failing was that, you know what, this looks like it's going to fail. And so I really didn't have it in my head, but I went down to the 10-minute. I saw we had the opposing trend. Look at how the 18, let me just zero in on this for a second. Look at how the 18 finally crossed back above the 40 on the 10-minute chart here on the gap up. So we had our opposing trend set up on this time frame, and then we got the big red bar, and then it slipped down through. And look at the zero line reversal and look at the low ADX. So these patterns develop on small time frames all the time. And when you get volatility going up, like I showed on the Friday video, so the spider's volatility is going up. What that means is that you probably need to go down to smaller time frames because the size of the bars are growing. And so what was the size of a daily bar is probably more like the size of an hourly bar now. And what was an hourly bar is now a 10-minute bar. Now, the negative to that is trading off the 10-minute chart, you kind of need to be a day trader. And that's why, again, I don't like to bring those up. I mean, there's plenty of channels out there if you want to follow a day trading guy. But I want to give you a methodology that you can use on longer term trends or on smaller trends if you want. I have used this on 10-minute and 2-minute charts on stocks and the markets and everything. I know you can do it. It can be applied. But the difference is kind of like your target strategy and how aggressive you have to be on the intraday trades. But the main point of this video today and what I was trying to get across here is we've got a setup where this could be bottoming. This was hitting this line, but it also looked like it could be bottoming. It wasn't clear cut. I mean, if you look at that low and that low, we have a lot of bearishness. We've made a pretty big drop away from the 18-week. But from a short-term standpoint, I think if you're going to be a trader, you have to go with where the river is flowing. And especially this type of trade, this type of trading where you're doing it on an hourly, 10-minute, 2-minute, that kind of thing. Don't get too caught up in market analysis for that. Follow the trading plan that you have outlined. And I would think that you're going to probably want to be taking profits before the end of the day if you're going to trade that way. But I wanted to show, I had a request to do something on intraday trades, but I wanted to do twofold. I wanted to bring up the idea that the best trade that you're going to do is one that's unforced. You want to have an unforced trade, and because that means there's no emotion involved. You're not feeling like I have to put something on today. If you feel like you have to come in every day and put a trade on, you're doing yourself an injustice, number one. And number two, you're going to put on a lot of subpar trades. Because I can tell you for a fact, if you're using a single time frame, like if you like the hourly chart, for instance, there are going to be times where there are not any trades on the hourly chart. Like I can just tell you for a fact because I've done it. And I've done my share of forcing trades back in the day. Also, if you like to use the daily chart off the weekly or whatever, you're going to come in sometimes and go a whole week, maybe two, without being able to find a trade. That's still trading, okay? If you're sitting back and you're waiting for your trade and you're patiently waiting for the perfect setup, that is trading, okay? You think you have to have a trade on to be a trader, but that's not the case. So I wanted to make sure I got this across in this short video and give you a little bit of an outline of how I would go about looking at this on a short-term standpoint. So if I'm looking at this and I want to trade off the hourly chart, I'm looking up first and I'm saying, okay, well, this just failed at the 18-day, which I know is really the most important factor right now. In this market, this line is more crucial than anything, and that's what I outlined on Friday. We've got this rally up and now it looked like it's failing. And then we got the same thing. So what is this? If someone can figure this out, what is this pattern? Well, it's the 2 time frame pinch. Okay, we just got the pinch. It went up and it ended up pinching. Once I saw this pinching and turning down, so it's not necessarily, if you're not a short-term day trading kind of guy, then you're not going to do a trade like this, okay? The only reason why I personally would do something like this is to hedge some of the accounts that I'm managing, and that's it. Otherwise, I wouldn't really do this kind of trade. But when the market is in a position where you're below a declining 18-week and stretched, but you just failed at an 18-day, and now you're failing at an 18-hour, and now you're turning down through the 10 and the 40. The 10-minute 18 and 40 as an opposing trend trigger with a zero line reversal and no ADX strength on the buy side. If you're a day trader and you don't take this trade, then you probably shouldn't be a day trader, because that is the trade. I mean, this is the trade that I would be looking for, taking 4 accounts, 4 different time frames into account and getting a perfect entry there. Now, yes, we've got a problem in terms of a big downside. Like, are we going to get a huge downside? I mean, we could get a massive move to the downside here, but that's not really in my head, in my analysis. That's not what I'm calling for. So I would be looking at, if I did this trade, if you happen to do a trade like this, coming up through and coming down, taking out the trend line, coming through there, you want to be taking profits, maybe even exiting out a couple times already, and then maybe looking to close it out at the end of the day, or at least go to a break even on the balance in case they turn it around or jack it up on Monday. So anyway, this is my thoughts on this. It's kind of a combination of giving you a perfect example of an intraday trade. And in this environment, if the market keeps dropping, the intraday trades to the downside can be pretty nice using an hourly and a 10-minute. But the other thing I wanted to talk about is to make sure you come in with an attitude that is, I'm not necessarily putting a trade on today. Come in that way. And then if you put on a trade, it's because it's a really good trade and not because you feel like you had to. Okay? Go ahead and post any questions or comments. Thanks.